Welcome to the rate update with Dan Frio. I am Dan Frio. Today is August 17th, 2021. We're going to talk about Fed tapering, what that means, and we have some really bad news out on the housing front, especially with builders. So don't go away. We'll be right back. I don't know if you remember, but feel free to go back the last 2, 3, 4 months of my conversation about the Fed and Fed tapering. When is the Fed going to actually start moving interest rates? And the consensus back about 6, 8 months ago is they're not going to do anything till 2023. And I said, I don't think so. There's no way they're going to kick this can all the way to 2023. I predict it's going to happen at the last quarter of this year or the first quarter of next year. So check this video out, and it's kind of backing all the stuff that I said, and then we'll be right back.
We've got some news on the Fed taper timeline as well. This morning, our senior economics reporter, Steve Leisman, has that for us. Morning, Steve.
Good morning, Carl. The Federal Reserve's Open Market Committee looks to be coalescing around a plan to announce it will taper its asset purchases in September and begin reducing them actually a month or so after. Interviews with officials, along with their public comments, show growing support for a faster taper timeline than the market had expected just a month ago. Those changing views follow strong jobs data the past couple of months, along with higher inflation readings, especially that producer price index. So a new potential timeline or taper timeline could look like this: a taper announcement in September. Last month, market consensus had been centered around November or even December, the taper beginning in October or November. Again, that actual market consensus had been a couple months later. All this depends on how much advance notice the Fed wants to give markets, and a tapering that lasts 8 to 10 months. I'm hearing a lot of folks say 8 months, depending upon how aggressive the Fed wants to be in reducing those $120 billion in asset purchases each month. To be sure, no decision has been made yet. The committee could delay the start or the announcement until November, especially if August jobs data proves to be weak, the Delta variant sparks a new round of economic lockdowns, or inflation readings ease off precipitously. But Fed Chair Jay Powell, he said recently that he did not foresee a large economic impact from Delta, that the Fed, quote, should take seriously the risk of higher inflation. Powell has yet to speak since all that data came out, the July jobs report beating expectations and the producer price index coming in at double the street consensus. Focus now turns to Powell's Jackson Hole speech and other Fed speak there, where Powell could indeed set the table for that September announcement. We have at 4:30 p.m. We'll be asking these questions and talking to Boston Fed President Eric Rosengren, the first on CNBC interview. Carl?
Well, let's look at all this as positive. Okay, on one hand, and I'm going to show you some news on home builders right now, their confidence is way down and lumber prices are way down, but there's still a shortage on semiconductors and just a lot of logistics getting something from here to there. There's just a logjam in the whole system. So the good news on a lot of this is my prediction is forbearances are going to start coming due, meaning people are going to start putting more homes on the market. Okay, that's one. The housing, the construction of homes, the prices are going to start to stabilize because a lot of the cost of materials are coming down dramatically. And then we're getting to that time of year where not a lot of people move. So based on that, I see the housing prices stabilizing. That's awesome for those that can buy. But then let's look at the interest rates. I'm gonna put a link down below in my video or down in the description of my mortgage calculator for kicks, just so you guys get the numbers. So I'm not manipulating it at all. Put in a loan amount of a home you're looking to buy, okay? And then put in a rate at 3, and then 4, then go 4.5. Let me know in the description down below, after you run those numbers, let me know if that new payment from 3 to 4 or 4.5 is completely ridiculous and would put you out of the market of buying a home. Okay, so that's all the stuff that we're talking about today. Basically, the Fed tapering, home prices, home building prices, I think are going to start to stabilize, if not start going down a little bit. The construction builders are just they're starting to get pretty gloomy right now. And then let's get to rates. So the first thing in the headlines that we see is this: time to taper. The taper. Okay, so you just watched the video from CNBC saying the Fed's going to do it. The expectations are they're going to announce it in September, and then between October, November, and December, it will take effect. I'm still maybe a little bit off on that because unless we see some really stable, hot employment numbers, I'm not sure it's going to happen in Q4 this year. I'm still, if it is, it's going to be November, December, if not January. So the next thing is home builder sentiment falls to lowest levels in over a year as buyers face sticker shocks. Look at just the headline right here, and I'll talk about this tomorrow. The building of the homes, lumber prices, they were at $1,600 in March. Now they're down to February, March, April, May. May. May they were $1,600. Now they're back to $450, lower than where we were at the beginning of the year. So that's nothing but positive news. Okay, for kicks, let's do this. I'm going to run the calculator for you guys. If you're looking to refinance or buy a home, mortgage calculator. So let's go into it. 250,000. This is what it prompts to. So if you just go to this, is exactly what it's going to come up for you. Let's put in a rate at 3 just for kicks, and it gives us a payment of $1,103. Okay, don't do anything else. You don't have to plug in anything else. I just want to make a point here. $1,100 at 4, $1,200, 4.5. So $170 more for a $250,000 house. I can almost assure you that your rent payment went up more than that last year when it reset. So that's my backdrop on rates. I'm not trying to push high rates. I'm basically saying it's not catastrophic. Your mortgage payment isn't doubling. All right. So now what's happening with mortgage rates? Well, it's not good news. And I kept telling everybody, guys, it's going to turn. The Fed is going to start tapering sooner than later, not 2023. So today we were actually, I would like to start out with the intraday chart. So first off, let me explain to you what an MBS is. MBS right here. MBS is down 8 basis points. What's that mean? MBS is mortgage-backed securities. It's the bond on Wall Street that trades that is the biggest component of your mortgage rate. Okay, so this is the biggest component. It's not the 1-year or 10-year Treasury or the S&P or the federal funds rate or anything. It is a mortgage-backed securities market. Okay, as this price goes down, the price goes down, rates go up. Okay, 8 isn't a big move, but look where we started the day. I'm going to open the day right here, and then we had nothing but red. Red means there's more sellers in the market than buyers. This is a scary number, or this is a scary chart right here. If I saw this much red in a stock, I'd be tempted to sell it. So this morning I put out a lock order to all the loan officers. If you're within a time frame we can lock you, we've most likely locked you today because we went from, look at the number on the side, the little black widget next to it, 101.53, all the way down to 101.24. That's a big drop, guys. That's over 30 points. Huge drop. Okay. So that's what I mean by there. That's what's happening through the day. So what economic news came out today? Well, not really much of anything other than Federal Chairman Powell came out and spoke, and they're insinuating right now, and we'll have more definite information tomorrow. So I'll post again tomorrow exactly what the verbiage is that they say. But the consensus is they're going to start tapering, as you just heard from the video from CNBC. So here's the chart where we're at, okay? And if you've been working with us, you've probably been locked up in this range right here, okay? Because I put a lock assessment out back on this day right here, okay? And the reason being is I didn't predict, but I said this, I think this is going to be our top, and we're going to start declining from there. Again, as this drops, as the price goes down, this is the price of the bond, rates are going up, okay? And then we started to come back. The markets always over-exaggerate, okay? So if it's going up, it'll go up too far and then come back down. If it goes down, it'll go down too far and then stabilize back up. So what I'm thinking right now is, let's look at some of the parameters behind this. Here's the 100-day or the Fibonacci levels. These are basically tops and bottoms that are in place in the trading ranges. Okay, so we're manipulating, or we're working around those right now. But what I'm focusing in right now is the 100-day, 50-day, and 25-day moving averages. These are all these squiggly lines right through here. And you notice if you look at here, and I know I got stuff all over this thing. if you look right here, we actually, well, just a little bit ago when I started the video, we were right on that line, and that is the 50-day moving average. So we'll probably be going to trade in this range here. I'm hoping that this line stabilizes and holds. If not, we're going to go all the way down to 101. Okay, that's going to push up rates. So where is this trigger right now? 101.27 up here. So if we go to 101, we're going to drop another 27 basis points. Look, we're at 102.2 up here. It is a dramatic change. Okay, so that's what's going on with rates. Economic calendar, like I said, Federal Chairman Powell's coming out tomorrow and speaking. This is going to be a big focal point in all the markets, because even the stock market and other bond markets are trading off of what this Federal Reserve is doing in regards to stimulus. All right. And then here's some big numbers that'll come out. Again, as you saw in the videos, their main focus at the Fed right now is jobs and job creations. So they're going to monitor the jobless claims, initial and continued. What do they look like? All right. And those will be a huge. So between tomorrow and Thursday, we're going to be sitting on the edge of our chairs waiting to see, okay, is there going to be a hiccup in the market? But again, I've already sent out a lock order to my team this morning, right in here, and we locked in almost everybody we had at that point, and then it deteriorated from there. So let's get on to where rates are. So you can see here where rates are right now. What I do is I post this every day to give you an idea. These are not my rates. I just want to give you an idea where rates are. So when we do talk, I say, hey, rates are at 3.1. You're not, oh no, they're at 2.5. No, these are basically right where rates are right now on all the 30-year products. So Black Knight surveys lenders all over the place, and here's the rates that they come up with. 30-year conforming, jumbo, FHA, and VA. All right, they're right here. Okay. Then the 1 day, 7 day, and 4 week delta. Delta means change. So what change has there been since yesterday? Well, 3 BPS with parentheses means it's down 3. So it means yesterday, this number here was 3.07. And it's down 3. So that means it's 3.04 right now. Okay, the 7-day delta is right here, same thing. And the 4-week delta is right here, 4 basis points. So basically, we are almost exactly where we were a month ago, a week ago, and a day ago. So not much change there. All right, so that's the good news. It's stabilizing, but it's starting to get worse. So again, my name is Dan Frio. I do the rate update every day. I'm looking to earn your business, earn your trust, earn your confidence, so you can see what I do on a daily basis. I'm in tune with the markets and what's going on. So if you have any questions, if you're looking to build a house, buy a house, or refinance it, please reach out to us. The best way to do that is go to my website, which is therateupdate.com, and that's right here where we did the calculator. And it's going to bring up to this right here. So what you're going to do is you can do one of several things. You can call me at 844-775-LOAN. That's right up here. You can apply online. So you're like, Dan, I just want to apply online, get pre-approved, and get moving. Or you can say, hey, I got a lot of questions, which most people do. What I ask them to do is click this, schedule a meeting. You're going to be assigned to me or one of my mortgage advisors. I've been in the business 33 years. Most of the guys have been in the business 10 plus years. So we know what we're doing. Also, all of the loans feed through me. So I analyze every one of the loans to give a second opinion on what my opinions would be and my suggestions. And that's what will happen. So you just pick a day and time that fits your needs and let us know how do you want to do the meeting? Do you want to do it by Zoom or do you want to do it by a phone call? And then at that day, that time, expect a phone call or a Zoom. So that's it for today. So all I ask you to do, give me a thumbs up, subscribe down below, hit the bell every time I post a video, you get an alert. God bless. See you tomorrow. Bye-bye.